What's going on, guys? D. Anthony here with evolutionsTraders.com. In this video, we are going to go over some of the 20 SMA plays that set up on the Nasdaq 100 today in the futures market. So many of you guys who have been following my channel already know the concept, the theory. We are looking for momentum plays. We are looking for, typically a 1-to-1 risk to reward ratio on these plays. And the amount of risk that you're putting on the table is going to be all dependent on the candle that closes over or under this 20 SMA. Again, it is not the EMA, it is the SMA. It is a momentum scalping strategy. Now, whether you want to kind of take the full 1-to-1, whether you want to size up a little bit heavier and take 5 points, 10 points, 15 points is your prerogative. Now, one thing that I do kind of want to focus on is if you kind of notice off the bell here, we have a lot of choppy action. And one thing that I want you guys to kind of keep in mind is right now the market is exceptionally strong. The bulls continue to surge higher. Regardless if you think the market can go, can't go any higher, it's continuing to show that it can. So typically when you have a stronger market, what you get off the open is initial washout. You get some type of gap down in the pre-market, and then you get that immediate trap, right? Just when everyone is thinking that we're about to go short, all of a sudden the buyers start to step in off the overnight session lows, off these first hour candle lows, and start to really push back higher. Now, if you have problems with patience and you have problems with discipline and staying patient off the open, these kind of markets, these kind of conditions can tend to, really get you into trouble. Because what you try to do is take each and every single move, in the first 30 minutes to an hour, only to chop yourself up, only to lose an evaluation account, to lose a funded account, to look back at the end of the day and see that you could have caught some fantastic moves. So what I would like you guys to all do is definitely mark out the previous day high and lows. And then what you're going to want to do is start to look at that opening range 30-minute candle. So for me, it's going to be the first hour of the day between that 6 a.m. and 7 a.m. time period in Pacific Standard Time. So market's going to open at 6:30. What I'm really focusing on is what does the price action do between 6:30 and 7, and then I'm going to mark out those highs and lows and correlate that with the previous day high and lows. Hope that makes sense. From there, if we're still within a range, I tend to kind of let go a lot of the plays that are formulating, unless it's like something, an opening bell drive play where, for example, like today, you can see we immediately shoot up off the open here. We get this nice little hammer candle that forms, closes back over the 20. It's that 20 momentum drive play that we're looking for. We're looking for the following candle to confirm at 6:35. It does confirm the high price that we're looking to get into is 17,556, confirms at 6:35 in the morning, and you get a nice momentum drive play here going up around 25.5 points. Now, depending on how many contracts you trade, you take 20, 30, 25, 15 points off the open could definitely be a one and done trade. You would have never gotten trapped in this zone. But let's be realistic here. A lot of us do continue to sit here on the market, in that first hour period looking for those setups. And a lot of us don't really take those opening plays because we're worried about the price action and the volatility. Now, you get a short setup that happens here at 7 o'clock, however, never confirms, immediately comes back up to the upside here. This play confirms and does stop you out. So you'd have lost close to around 15 points on this play here. This is your reason why candle at 7:10. Immediately you would be down on the position. You do get another short opportunity that kind of presents itself here. Does a whole lot of nothing, a lot of barcoding here in this time period between 7:20 in the morning Pacific Standard Time all the way down to where it bottoms out at 8 o'clock in the morning Pacific Standard Time. And that's really the time where you start to see the shift on the sellers starting to get trapped. We get this hammer candle that forms. We get a sweep of the lows. So notice the low here, notice the low here, and notice this low here at 8 in the morning. We get that initial sweep of the first hour lows and immediately no follow through and no trap. So again, if you were looking for the short, which again is a completely valid setup, you have to get out of this play once you get a following candle that closes back over the candle you're looking to get into. So if you're looking to get into this play at 8 in the morning because we're sweeping the first hour lows, you have to immediately take that 17-point loss here once we start to drive back over it. Again, understand that there is a trap that's being formulated, and then what you do at that period of time is you drop a little price level line here, you drop some type of demand zone, whatever you would like to kind of drop there that visually is going to tell you, hey, you know what, we've got some support here. So now you can start to see this range starting to formulate. Again, if you kind of look at these first hour highs here, the top dotted line that you see here, this line here is the previous day's high. So I always kind of mark that out just so I kind of know where we stand. But if you kind of look at what's going on here, you get stuck within this first hour range for quite some time here. Again, you do get a 20 SMA play that starts to confirm here at 825. Now, it was a 20-point range. You would have been giving yourself a 20-point stop loss, looking for 20 points to the upside. More than likely, if you were getting into this play, you would be selling into first hour highs, right? Why would we sell into first hour highs? Well, because if we've been playing in this range and we do get rejected and you're up 15, 16, 17, 20 points and you don't take your profits, you're going to be very, very upset at yourself if this comes all the way back down to the bottom of the range and stops you out. So definitely want to take your profits there. Now, when we do break the first hour highs, I'm always looking for a confirmation candle of the new high price. So that would come at 9:15. You would get into this play here, set a stop loss any close below the previous 5-minute candle. So your stop loss would be at 9:10. We do wick below it at 9:20, but again, remember, you have rising 20 SMA support and you have no close below the previous 5-minute candle of the new high over the first hour highs. Hope that makes sense. This candle starts to explode at 9:20 for 27 points here. You could have taken a nice little drive momentum play there. Comes back down to back test this rising 10-day moving or 20-day moving average. Holds this price point, holds the initial first hour highs. From this, you have to tell yourself this is a full send go. We have created this demand zone. We have created this I want to put a box here so you guys can see. We have created this demand zone here. You can see, notice this demand zone where it's very, very choppy, very, very choppy. You've got a clear floor, you've got a clear ceiling, and then you get, boom, the next 20 SMA play. So you got another momentum drive play here over the 20 SMA with a rising 20 SMA. This is picture perfect textbook kind of price action that you want to see for these 20 SMA plays. Created a floor here, we broke out of the range, we back tested the breakout from the opening hour highs, consolidated. Again, 20 SMA sets up to the short side here. No real confirmation on this play here. I don't really see someone wanting to take this when we've kind of, are trading over, the first hour highs. Doesn't really make any sense why you would want to do that. You're looking for that continuation follow through back up to the upside. You get that play here at 11:05. Again, this is an 11.5 point range. That would be your stop below this candle, whether you want to set a hard stop here if it wicks below, or you want to use my method where I use a candle close. Now, again, just keep in mind that if you are going to use a stop loss on the closure below your reason why, you're going to lose a little bit more than 11.5 points because you're going to wait for that candle to close. So it could be closer to 15, 17, 18. It just all depends on how much it's going to go down. Now, obviously, you get your 11.5 points there. But if you can, kind of tame yourself to be a little bit more disciplined, and at least as long as this is working in your favor, try to stretch it a little bit more. The next real area that I could have seen you taking profits is into previous day highs, which was this 17,640. So again, this play here, profits need to be taken into it, right? Even though it does explode, this is a new play here. Once you break a previous day high channel, then you confirm it, you get long here at 12:05 into the closure of the market session. And I hope you guys understood what I was talking about today. I hope this gave you a little bit of context on how I'm reading the market. how I'm deciphering what's going on in this period of time. Again, as soon as I see the high, as soon as I start to see these lows, I really start to mark them out and then paint the picture of telling myself we are trading with inside of a range here. I need to break out of the range, whether it's to the high side or to the downside, before I start to really take my trades. Again, maybe I would have missed out on this trade, but I would have caught this one, I would have caught this one and this one. Again, on the future side of things, I did not take any plays today because I was, did a fantastic job today on my options account. So I traded Tesla and I traded it beautifully. Was looking for this dead cat bounce on Tesla. It's been a little bit of a lagger. I took 10 contracts and I actually double dipped on the play where I took a 20 SMA play to the long side, was able to capture a nice $700 move there, and then got back into the trade on a new high of day break and was able to hold that going into the close and then selling out of that position. So it was a very, very lucrative and fantastic trade. So again, always remember, when you're looking to trade, make sure you have a plan. When you have a plan, all you need to do is sit back and wait for that plan. Execute when you get that plan to come to life. And when it comes to life, don't be hesitant to take your money and your profits off the table or cut your losses where they deserve to be cut. My name is D. Anthony. If you guys would like to trade with me each and every single day live, make sure you guys sign up with the link down in the description box below at evolutiontraders.com. I'll see all of you guys on the inside. And to those of you guys who are on YouTube, make sure to like, comment, and subscribe, and I'll catch you guys all on the next video.